Hi, this is James Shugg in Westpac's London office with the Global Economics Wrap prepared on Thursday the 22nd of January. Well, the big news this week, apart from a sneeze behind me, was the European Central Bank announcing a quantitative easing program worth 60 billion euros a month. It's going to run until at least September next year. So that'll see purchases of almost 1.2 trillion euros of largely government bonds off the banking system, and that will be continued even beyond that point if the ECB judges that the inflationary pressures aren't starting to build sufficiently. I mean, the big risk, of course, is that the Eurozone experiences a slip into broad-based deflationary pressure. The CPI in Europe already running below zero. A lot of the detail around the program will be of interest to some listeners. The ECB won't take creditor seniority over other creditors in the event of a default. Most of the risk will be taken by national central banks in relation to the government bond purchases in their jurisdictions, although 20% of the risk will be shared across the Eurozone, taken on board by the ECB itself. There's a lot more detail there, and I'll leave that to my colleagues to run through if they consider appropriate. But the main point to make is that the ECB has overcome all the obstacles, legal, the lack of willingness of the part of the Germans in particular to embark upon this sort of easing policy. But the Bank of England's done it, the Bank of Japan's been doing it, the Fed was doing it until recently. The ECB has now joined the fold, although some 6 years after the Fed, for example, started doing it in late 2008. Anyway, so that was the big news, but we also had the Bank of England, the two dissenters there over the last 5 months who've been arguing for higher rates. They dropped that call. Bank of Canada cut rates this week. The Danes cut rates twice this week. The Turks cut rates. And the Swiss, of course, did a week ago as well. And we even think that in New Zealand there's a possibility of a rate cut over the next year or so. Although our view there remains that the RBNZ will be tightening rates in the second quarter of next year, but that's still quite a long way down the track, and there is risk of easier policy in the meantime. And we continue to expect the Reserve Bank of Australia to cut rates at the February meeting. Next week we get the CPI coming out, and that'll be a final input into that RBA rate decision in early February. The Federal Reserve meets next week, and we're expecting them to continue to express patience about the policy outlook there. No need for a rate rise in the US anytime soon. We continue to expect that to come through in the third quarter of this year. We also get GDP numbers next week for the fourth quarter, likely to show a slowdown from 5% to 3% annualised growth in the fourth quarter. Other data on business investment and some parts of the consumer spending story have been weaker as well, and of course inflation is falling quite sharply in the States. So all of those factors feed into the view that the Fed is unlikely to be tightening rates anytime soon. In China, we had GDP numbers this week which showed a 7.3% annual growth pace. Some of the data on China has been a little bit less worrisome. We've got the Westpac MNI Chinese Consumer Sentiment Index coming out next week, and recent iterations of that, although the overall level of confidence has been low, there's been some evidence in the detail that suggests that households are starting to feel a little bit less worried about the outlook. Our sense is that the worst of concern about the prospects for a slowdown in Chinese growth have perhaps passed. We still have real recognition that there are risks around the global growth story, and the World Bank revised down their global growth forecast this week. But the Chinese story looks like it may have passed the worst. There has been some easing, of course, in Chinese policy on various fronts of late. And I think that's probably about it. So Australian CPI to watch for next week, the Fed decision, US GDP numbers coming up, and we've already had, as I say, a very significant policy easing announced by the ECB. They're the main points to cover this week, and I'll be back again next week.